Okay, so we're going to do the illustrated example from page 113 from the textbook. We're going to follow our steps for creating our trading account and our profit and loss account. Remember, the point of these is for the trading account to determine the gross profit, and the gross profit is the sales less sales returns less cost of goods sold. So we're going to do this one first to determine our gross profit using the trading account, and then afterwards we'll use the profit and loss account to determine net profit. And net profit is the gross profit we determined earlier plus all revenue minus all expenses, all the other revenue and other expenses. So, step 1, close sales, sales returns, and cost of goods sold to the trading account by doing the opposite to their balance to make them zero and record it in the journal. So we'll do that step first. I've pre-populated this exercise here and given it a bit of colour so it's easy to see. So step 1 says close sales, sales returns, and cost of goods sold. So sales, sales returns, and cost of goods sold. We'll start with these. By doing the opposite to their balance to make them zero. So the balance on the sales is credit 15,000, so we'll debit sales for 15,000 to the trading account. So the other side will be trading account 15,000. This one's done. Sales returns and allowances. Sales returns is 800 debit, so we will credit sales returns and allowances for 800, and we're closing it to the trading account for 800. Put that one in the wrong spot, that's okay. And finally, cost of goods sold is debit of 5,700, so we're going to credit it. And debit the trading account for 5,700. That's step 1 done. It zeroes those out to the journal. Now we post these entries to the sales, sales returns, and cost of goods sold trading accounts. So we have sales 15,000. We posted that to the trading account, and we debited sales for 15,000. So the debit sales for 15,000 equals the previous balance. If it's a credit, we minus the debits, and you get 0. So we can use the sum, or we know in each of these we're reducing them to 0, so we don't have to do that every time. Sales returns and allowances we have credited for 800, making this one 0, and the opposing account was the trading account. And the cost of goods sold, it was debit 5,700, we credited it for 5,700, we know that's going to be 0, and the opposite account was the trading account. And we make the ledger, posted ledger for the trading account. So the trading account was credited for 15,000. Equals that one to credit balance. And that was for sales, as we can see. Then the trading account was debited for 800. The credit balance minus the debit balance to give us our further credit balance, and that was against sales returns and allowances. And finally it was debited for 5,700, take out previous balance which was credit, minus the debit which will give us our final credit balance. and that was against, as you can see, our cost of goods sold account. So we've closed off our sales, sales returns and cost of goods sold to our trading account. And what we have now is a balance in the trading account. So this balance here, 8,500, is going to be our gross profit. And we now need to close the trading account to the profit and loss account by doing the opposite of its balance. So its balance is 8,500 credit. We need to do 8,500 debit and record it in the journal. So let's do that now. If it's running currently trading at 8,500 credit, we will debit trading account for 8,500 and credit profit and loss account 8,500. Then we post that one to the ledger. 8,500 credit trading account. Debit trading account, take the previous balance of credit, it's in the wrong spot, previous balance of credit equals that one, minus the debit, which will give us 0, and the opposite account was the profit and loss account. So this amount here is our gross profit amount. And finally, we've posted our trading account journal entry to our trading account. We just need to do our profit and loss account, which was credited for 8,500. So 8,500 for our credit balance. And this amount came from our trading account as per our journal. We have now derived our gross profit. The next step is to manage our profit and loss account. We've determined our gross profit, now we need to determine our net profit, which will be our gross profit, which we have now, plus all other revenue minus all other expenses. So we have to close off all the ones we haven't highlighted yet, our other revenues and our other expense accounts. So we'll follow the steps. Close all remaining revenue accounts and expense accounts by doing the opposite to their balance, make them 0 and record in journal. We'll start with our revenues. So our commission revenue was credit 500, so we debit commission revenue 500, and we will credit our profit and loss account for 500. Then we'll do our sales salaries, which was a debit of 2,000. So we will credit it for 2,000. And we'll do our profit and loss account. After sales salaries, we've got office salaries, which is a debit of 1,000. So we will credit it for 1,000. Copy this one down, make it faster. After office salaries, we've got our rent expense, which is a debit of 300, so we will credit it for 300. And again, we'll do profit and loss account, 300. We now need to post these general journal entries to the revenue and expense ledger accounts and the profit and loss account. So we'll do all of those journal entries to the ledgers. First one we did was commission revenue, so 500 debit commission revenue 500, leaving us with a 0 balance here, the credit minus the debit, and the opposite account was the profit and loss account. Cost of goods sold. Sales salaries rather was 2,000 debit. We credited salaries for 2,000 here, and the opposing account was the profit and loss account, leaving us with a 0 balance. We're closing all of these off. Office salaries, same again, it was debit. We're going to credit it for 1,000, giving us 0. The opposing account was the profit and loss account. The rent expense, we credited the 300, giving us a zero balance there. Closing to our profit and loss account. And of course, for all these journal entries, we need to close them to the profit and loss account as well. So we have here profit and loss account was credited for 500, and the opposing account was the commission revenue account. And the balance in this will be the previous. If it's a credit, we add the credit. We could give ourselves an equation here. So it would be a credit minus any debits, there are none in this case, plus any credits will give us our running balance equation. So we can run this one all the way down. For now, it's a credit positive. For the next one, profit and loss was debited 2,000 for sales salaries. We can copy this equation down. We can see it'll take the blue minus any green plus any purple, which gives us our new credit balance. After sales salaries, we had office salaries. So profit and loss was debited for 1,000 for office salaries. Copy this equation again. Still 6,000 credit. The last was rent expense, was debited for 300. To rent expense. And we copy our equation down again, giving us a final balance of 5,700 credit in our profit and loss account. We need to close the profit and loss account to the capital account by doing the opposite to its balance and record it to the journal. Our profit and loss account here, but we also in this scenario have a drawings account as well, which is a negative owner's equity account. So we also need to close that one off. It has a debit balance of 200, same as always. So we will credit our drawings account for 200, and we'll close our drawings off to our capital. And we'll also close off our profit and loss account, which has a credit balance, so we'll debit profit and loss 5,700 to our capital account. And all that's left is to post these entries to the profit and loss, capital account, and drawings account if you have one. So the capital account has been debited for 200. The opposing account was drawings. Credit balance minus the debits. And our drawings balance is debited for 200 against our capital account to give us a zero balance. And of course, profit and loss was closed off the capital by debiting 5,700 to give us zero. And our capital account was credited 5,700 from our profit and loss. So we take our credit balance, we add the credits, and we're left with our new credit amount. And finally, we can see that the trading account has our gross profit figure of 8,500. Our trading account, sales less sales returns less cost of goods sold, is our gross profit, and our profit and loss account has our net profit 5,700, which is our gross profit we drew down and took away all our other expenses and added all our other revenues. And we're now ready to prepare our income statement and balance sheet.